Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hi, everybody. Welcome to the show. I'm Don McDonald, along with Tom Cock. This is Talking Real Money, where we, of course, talk about real money, real life, your future. Really, this show's about your future, about how you can enjoy a better future. That's why we spend so much time talking about retirement and investing. And our number, if you have a question for us, 855-935-8255, 855-935-TALK. So grab a phone, stop in. And if you do, you get something.
Yeah, you get a free copy of Don's book.
Yeah.
Updated.
And I've been signing them.
I know you have.
Signed, sealed, and delivered.
I see the ice pack on your shoulder there. You're going to recover.
For free. Oh, I got an ache right there.
A lot of signing.
Need a little bit of that CBD oil that's going around lately.
Well, I'm sure they have
There's a lot of that going around.
Plenty of that available where your current location. I'm sure they're just teeming with that.
In Western Virginia, Southwestern Virginia.
Oh, Don is already getting his
There's a story.
Travel plans warmed up for the summer, and he's driven off to some location that really has not been heard from, I think, since Daniel Boone was there somewhere in the mid-18th century.
He was
something like that when he was getting chased by the wolves.
Yeah, I think it was 1760.
Yeah,
he got chased by wolves into Abingdon.
Century. Yeah. Abingville,
you did.
Abington.
I'm agreeing with you.
Okay.
Abingdon. D-O-N.
It's D-O-N, not D-U-M-B, right? Okay, just checking.
Well, of course. No,
sorry, just checking.
Oh, man,
so.
you are going to harass me mercilessly about this. What I'm doing, let me just explain this. We talk a lot about planning for retirement.
Yes.
And some of the things, we talk about financial planning for retirement, but one of the things you're going to be talking about at your next class in June is lifestyle planning, too.
Yeah, I didn't know they're going to put you out to pasture this early, but okay. The big
my wife and I have been thinking about the semi-retirement that I'll probably enter in my 70s, but trying to plan for that, trying to find a place we'd like to live that has affordable housing, that has decent health care. And where no one can find us.
Yes, that's true. What people that end up there, they got lost on their way to Williamsburg or something, or I mean, are they thought they had
it's a long way away.
That's a long way from Tennessee or something, or I mean, I don't know why that. No offense, why that town is there.
We like it. We like it because it's got great theater.
And you recognize a lot of things.
Art museums.
Well, there's a lot of stuff from the mid-18th century, and that's something you recall affectionately from your youth. So, I mean, I can see how that makes...
Mid-19th.
Oh, okay, I had that slightly wrong. But anyway, it looks like...
Your century's off.
It looks like mid-18th century to me.
You know, he's harassed me mercilessly for about 2 decades about the fact that I live in Florida.
Well, and a place called Celebration. I mean, come on, make it harder next time. And you didn't. Frankly, you made it just too easy.
I made it easier. Now, I got to tell you, and they have this gorgeous hotel here.
Okay.
It's really a nice hotel. It's called the Martha Washington Inn.
Now, what association does the former Mrs. Washington have with the town?
Clue.
Oh, okay.
No clue.
All right, just checking.
No clue.
Okay.
They just named stuff after her because I think in the early or the late part of the 18th century, she was very famous.
Well, yeah, and Mount Vernon is just 100-hour drive from there or something.
No, it's 5 hours.
Pardon me. 100-hour horse trip, which is how you get around town, right?
Horse trip.
They don't have cars there yet.
Probably. Oh man, some of the streets are like carriage narrow. They're really narrow.
One day they're going to have phones and everything and the internet and. Wow.
But this hotel's great. We're in the hotel,
and
I'm in the library, which is this gorgeous big old.
So if we have any resources, any questions we can't answer, you can go dig them out.
I've got a complete Civil War library over here because
they just put it up there. It's just over recently in the town, I'm sure.
Yeah.
Let's put these Civil War things up here because that one's in the history books now. Yeah.
And they've got 24 plays a year. So we go to like a play twice a month.
I think that's wonderful. I really do.
I like that kind of stuff.
I think that's great. Yeah.
I like theater.
Don't get lost on the way home. You'll end up in West Virginia, and I don't know what'll happen to you there.
Well, if you make a right instead of a left, you'll end up in. But we went through 5 states. It was like Florida, Georgia, South Carolina, North Carolina, Tennessee, Virginia.
And if I want to visit you, I need to start planning the trip soon to get there sometime next year, because probably
covered wagon
transfers or whatever it is to actually get to Abingville, West
It's
Virginia.
one transfer in Atlanta or Charlotte.
And what kind of plane goes from Atlanta to near where you are? Just asking. I know it's not a 737 MAX, okay, but what other plane?
No, I think it's an Embraer or whatever that is. I think it's one of those Brazilian planes.
I flew that out of Payne Field, so they're actually a pretty nice plane.
Right, on your trip. So, see, it's just like that.
Yeah, except we have this rather thriving metropolis right next to us called, that's right, Seattle. Oh, yeah.
Seattle.
And your closest
Seattle
one
nice.
is 3 time zones away, I think, or something.
Wow. Yeah, you're going to be in rare form. But anyway, we'll talk about this and a lot more. 855-935-TALK is the number. Give me a call.
Are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Got a question? Has something to do with money? Give them a call at 855-935-TALK, 855-935-8255. I'm Don McDonald. That's Tom Cock. You're out there. We'd love to hear from you, even though it is a beautiful day in Seattle.
Oh.
Darn it.
Hey, I'm going to have to do the back lawn today, so I'm firing myself up for that.
You're doing the back 40.
Woo-wee. Well,
I worry about...
And for you, the back 40 literally will be the back 40 when you move to Abbeville. I mean, that's going to be different.
My backyard, if we buy this house, my backyard is smaller than yours.
Okay, well, that's
and doesn't have
a pretty good one, pretty big.
Doesn't have a 90-degree grass cliff.
That's the problem.
I'm telling you, I don't know how you mow that thing. It's like
either. So I don't look
straight down,
and
you go straight down that hill right into Canada.
Well, not south. That would be right into wherever that is. North, go to Canada. You can see Canada from there.
I'm going to harass you back, I swear.
I deserve it. So
you definitely deserve it. 855-935-TALK. Yes, what are we talking about the stock market?
People wanted to know. I mean, this week, that Monday was scary for people that own stocks because the Dow Jones Industrial Average fell 617 points on Monday. Now, the next 3 days, it made up a lot
Sounds terrible.
of that. Yeah, I mean, it sounds catastrophic. That, by the way, is less than 2.5%. And this is a number I love. The Dow Jones Industrial Average has fallen 2% in a single day. How many times in the last 120 years?
See, I would not have thought very many.
Yeah,
I would have thought, maybe a couple hundred. Yeah. It's a pretty substantial movement. So my original thought was maybe 100, 200.
Yeah, it's more than 1,000 times that has happened. 1,011, 1011. That's a lot of times. And here's the thing.
That's a lot of volatility.
When you hear 600 points, you think, whoa, that's huge. Now, 600 points was huge when the Dow was trading at 1,500 or 2,000. Remember, it's trading today at 26,000. So 600 doesn't. I mean, this is part of the problem with the numbers.
I know.
It gets me, and I like that when you do the morning reports, they at least say the percentage because, it's still within reason. So take a deep breath.
Giving the percentage in my opinion, if every report should give the percentage number because that's a more realistic perspective of what the market's doing. This point thing with the Dow.
Imagine if because Jason Zweig pointed this out, you didn't pay attention to the market the first 3 days of the week. You got up Thursday, looked at the numbers, you would have thought nothing had happened because even though it took the big dip Monday, it came back on Tuesday, Wednesday, and Thursday. Wouldn't have mattered. That's the way you should be looking at the numbers very long term anyway because day to day, nobody knows. It truly is a flip of a coin.
The long-term reality of the equities market has been a steady rise. People don't get that. We get too caught up in the day-to-day gyrations and in the news. We worried so much about these tariffs that really aren't that big a deal. They're a deal, but they're not that big a deal. 855-935-TALK is our number. Give us a call. Alex is up. Welcome to Talking Real Money.
Hi, Alex. How can we help you?
Hello. Thanks for taking my call. I had a question about currency hedging. You talked about that last week, I believe, and I think you said that funds investing in international stock markets use currency hedging. I was surprised because I thought it was an expensive thing to do. So I just wanted to ask if every fund does that, or
well, let's talk
only
about
some active managers.
Yeah, that's a great question. Let's talk about what currency hedging is, first of all. Don, I mean, because you explained it well last week.
Yeah. And what it's really not expensive on the scale of a major mutual fund company, because what they're doing is they're selling or buying. In many cases, they're buying or selling currency futures contracts.
Yep.
And they're not playing that market. These are just little insurance policies that cost tiny fractions of a percent when you're buying them in the numbers they're buying them.
And I believe
and
you are correct.
I don't know. I can't think of a single U.S. fund, a single U.S. managed international equity fund. There may be some exceptions, but I can't think of one of the big ones that doesn't currency hedge.
You still there, Alex? Alex?
Yes.
He's gone.
Okay.
Yeah.
I was trying to understand if Vanguard, if they do that. I didn't find
yes, Vanguard
any
does.
information on that. So, okay.
Yes.
Yeah, definitely.
It's not something that they advertise. It just has to be built in to reduce that volatility. That's one of the things they want to keep out of the portfolio.
You're moving money back and forth. You need that protection. Here's the thing. I think when you hear hedging, you think that's some sort of, you're making a bet of some kind, right? That's what people think. This is not that. I mean, it isn't a way because you're buying protection from the change between the U.S. dollar and the yuan, for example, right? But it is not making.
But they're not going long and short
Correct.
securities.
Yeah, exactly. So it's not hedging in the way that you may understand hedging to be. That's how I'd put it.
Okay. So you're saying it's not expensive for those funds?
It is not. It's not a major expense at all, and they build that into their expense ratios.
Is that helpful?
And Vanguard, I'm looking at Vanguard.
Yeah,
they do it.
Yeah. Thanks, Alex. Thanks for your call. Yeah, I mean, and you really can't avoid it if you have a major mutual fund that is invested internationally, because you have to have some of that protection due to fluctuations in currencies. Correct?
Absolutely. And at Vanguard's website, they have a white paper on why they currency hedge and how it works. What I'll do is after the show today, I'll put a link up at Talking Real Money for that white paper. So if those of you interested want to learn more about it, you can go click on that and find out more.
Yeah, I mean, and we'll spend some more time later in the show talking about investing internationally, because Vanguard just wrote another paper that I think deserves some attention about this. And it is something that comes up somewhat regularly because the last 10 years, the U.S. market has been far better than the international markets. So people think, why would I invest internationally? We'll talk more about that in a few minutes.
Yeah, and again, I want to make it really clear that Vanguard and other mutual fund companies aren't playing the currency market. They are not trying to get a return from playing currencies. In fact, they even state in their paper that currency doesn't. Currency has no intrinsic return. Currency doesn't make you money. Currency trading makes you money sometimes, but it's gambling. And
that's
Vanguard's,
when people hear that, that's what I believe they're doing. And that would
I think
be
that's
expensive.
what they're doing.
Yeah, so this is simply how to make sure you can move the dollars back and forth without a big
And this
problem.
is pretty normal for any international equity or bond portfolio, because there's enough risk with interest rates or the market itself. They don't want to add another level of risk.
Yeah, I think that's a good way to put it. All right.
855-935-TALK is our number. 855-935-8255. Give us a call. We'll get your phone number from you. We won't call you and bug you, but we'll get that so that we can send you a free copy of Financial Physics.
Everybody loves Financial Physics. It is filling up the library in Abbeville, West Virginia right now.
Abingdon, Virginia.
Abingdon.
You know, that's what I should do. I should sneak a copy into the library here at the Martha Washington Inn.
Be well read
Put it on
by
the
the
shelf.
time you noticed.
Yeah. All right. We'll be back.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Wow, this Vanguard currency white paper is quite the read. It gets into those currency weeds. Wow.
You need to send
you can
that
tell
off
they're
to,
academics.
To Bill Higgins
to Bill.
Before he retires.
Yeah. Bill would love this thing. This is data upon data upon. Wow, look at all those charts. I'm not going to read that. 855-935-TALK is our number. 855-935-8255. I'm live in Abingdon.
Yeah, Abingdon.
Tom's in Seattle.
Abingdon. Don, you did read a paper that Vanguard recently wrote because it's only 2 pages and it's pretty simple to read. That's no reflection of your intellectual ability. But
that's okay.
They write these regularly. They talk about various things. And here the headline was Embracing a Global Stock Market. They're talking about owning international stocks. And they point out, first sentence, U.S. stocks have done far better. So why would you want to own something that hasn't done as well? And by the way, that's the reason I do want to own something. But they point out 3 reasons, 2 of which I think make sense.
Yes, you said that.
How
many?
3. 2 of 3.
Just 2?
The rationale for diversification is clear. U.S.
66%.
What they talk about is the fact that not everything goes up and down together.
You mean that they don't correlate necessarily?
Yeah, they don't necessarily correlate. And number 3, which I think also pay attention to, going back, and I think we can go look at this going back to 1970, had you owned half U.S., half international, you've actually reduced the volatility, you made a little bit more money, and you reduce the volatility because not everything goes up and down together. I'm in agreement with those parts, but when they start veering and talking about, I wish they wouldn't do stuff like this. They're predicting the future, and Vanguard should know better than that. In the next 10 years, the expected return outlook, according to Vanguard, is 8.4% for non-U.S. stock markets and U.S. stocks 5.1%.
I always wonder how they can possibly arrive at those figures.
The only way I could think of is because U.S. stocks have done far better the previous 10 years, right? I mean,
that's probably
what
it.
Else would be the reason why? How would you know that?
What do you base that on? What factual information?
I know
can you
Robert
possibly
Shiller does
base
this too. Yeah, he talks about that.
You can't. Basing a future prediction on what do you base it on? You can't do anything about it. Now, the reality is you want to be in international stocks all the time because they have bailed you out in some terrible markets for U.S. stocks.
Early 2000s.
That lost decade.
Yeah, early 2000s.
That was horrible for U.S. stocks. People forgotten how well the international markets did and how much return they added to investors' portfolios.
In those 10 years, a terrific amount of return that they built in that U.S. made nothing in the S&P 500.
And I'm not saying that it's a true non-correlation that one goes up while the other goes down, because they don't. They don't move in lockstep, but they don't move exactly opposite either. So you're going to have to live with some of the crazy stuff. We talked about this week. We're talking about international. Last week we talked about value. These are asset classes that at times will underperform, but they need to be in your portfolio because you can't predict the future.
I think that's exactly right. And people forget that the Standard & Poor's 500 is 500 stocks out of, you could invest internationally 13,000. So it is one asset class. It is one type of equity, right? And yet everybody wants to compare everything to that and say, well, why am I not making as much as the S&P 500? Specific asset classes will outperform others for long periods of time. We don't know when that could happen. We don't know what the future will look like necessarily, but we do know that being more diversified has been a better approach for a long period of time.
And something we've discovered quite interesting, just based on the presentations and the classes and the information we share with people. Every year we look at the percentage of the market that is U.S. and international. And about 10 years ago, it was almost exactly 50-50 split. 50% U.S. Yeah. This is global market capitalization. 50 U.S., 50 international. Now it's 53 U.S.
Yeah, right, because U.S.
47 international.
Yeah, that has to do both with the returns of the markets and the quality of the U.S. dollar, which has made more than other currencies in recent years.
Therefore, they probably will get back close to parity someday.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
And money is a really important part of your life. So give us a call here at 855-935-TALK, 855-935-8255. I'm Don McDonald, broadcasting from the Martha Washington Inn.
Just a minute.
In Abingdon, Virginia.
Be quiet for 1 second. Yeah, I heard the banjos there. Okay, you're there. I thought maybe you were making
Actually,
it up.
this is a big bluegrass area.
I kind of figured.
In fact, we're going down to the microbrewery down the street tonight to listen to a little music
I'm
and
gonna let
drink
it
beer.
go 'cause I can't.
You're not either. No, you're not. No, you're not going to let it go.
I'm sorry.
You are not going to let it go.
Right.
I swear you are not ever going to.
I'm taking
Hey,
a few
we had a
minutes off.
bluegrass. We had a bluegrass event in Seattle.
That's true.
Remember?
We did. Yeah, it was great fun. That was fun.
It was pretty fun, wasn't it?
Yeah, it was good. Yeah, all right.
So
Okay.
stop making fun.
Okay, okay.
All right. Oh!
Yes.
I got this. You know,
Did you
we're
give
getting
the
into this
number?
crazy nuts.
You gave the number.
855-935-TALK.
And you
I
get
think
Don's
I did.
book free, so call us. Okay, go.
Yeah.
Yeah.
No, just something really interesting because we've got all these crazy. I was driving up here listening to interviews on the radio, we're listening to NPR, and they were interviewing presidential candidates, various ones. And I'm going, I don't even know who these people are. There's so many presidential candidates.
There's now 23 Democrats, I believe. So.
Holy cow.
Yeah, it's a lot.
But there may be a new way to vet them based on their investment acumen.
Oh, please, really? All right.
Yeah,
I
if they
wasn't
make
gonna-
smart investments.
Yeah. You're referring to our local candidate who's running for.
Oh, you mean Jay Inslee?
Jay Inslee. So he was in the because they had to do the disclosure, right? He had his disclosure recently, and they discussed the fact that he had bought.
I'm on a local government. I have to disclose my lack of assets.
Well, no, I think this was because of the presidential race. I don't know. Anyway, it was disclosed that he had some money from something, and he decided to invest. And he decided to invest in stocks.
Wait. Let me ask. So he got into the Vanguard Total World Index.
No, he did not.
Oh,
he bought.
All right, I'm starting to worry a little.
Instead, he bought Microsoft. Okay, now you're going to remind. I'm going to have to look at the rest.
Wait,
of
let me guess. Microsoft, Amazon, Starbucks.
I have to look it up. I can't. I don't want to miss. But it was all those. But it was just a few.
I'm just guessing.
Stocks. It was a few individual stocks.
All right, I'm going to look it up too.
Boeing, Microsoft, Amazon, as you said. Yes, correct.
Yeah.
So somebody was asking me, well, is that a good idea? No, that's not a good idea.
Do you know what he's doing?
Yeah.
He's showing his bias.
Well, okay, his home.
He's buying. He's showing a home bias,
right.
Like Americans. I only buy American companies.
Yeah, right.
No, because do you eat a Nestle's chocolate bar? You're eating a Swiss company's product.
Yeah, among other things. So here's the thing. This is not a good idea, and I don't know Jay well, and I don't know his investment policy well. He is in his late 60s, so he should be thinking about retirement sometimes. Although he maybe wins the presidency. I don't know. If he does, then he'd be like the rest of those guys who are president. They're going to be president until they're like 94, so retirement's not going to be a big deal. But he should not be buying individual stocks. He should have an investment policy that says, here's how much I'm trying to make, here's how much volatility I'm willing to accept, and that should not include owning, I'm going to quote it, Amazon, Microsoft, and Boeing. Those are the ones he bought recently, and that was part of his disclosure filed as part of his presidential campaign. So I had that right. No, this is bad policy.
I think we ought to offer him a free, no-obligation risk quiz so he can determine his risk tolerance. And then he could use our two-fund portfolio.
Yeah.
Vanguard Total World Stock Index and Vanguard Total Bond Index.
And then
build a portfolio based on that risk tolerance.
Every place he goes, he can say, yeah, I own part of that company. You bet. I'm involved in your local economy.
Exactly.
That's a great one for a politician.
Right.
Yeah, I mean,
you should be a political consultant.
Political hack, maybe. Everywhere he went, then he could say, yes, of course, I invest in fill in the blank here. Because I'm in Atlanta. Guess what?
Wow.
I'm invested in Coca-Cola. You know, all that kind of thing.
I own
So-
Coke and Delta Airlines.
Delta Airlines. There you go. So, I mean, it's perfect strategy. Way better than, I'll have to go buy a few shares of Coca-Cola so I support the local economy.
I didn't even think of that one.
Yeah, there you go.
That's brilliant.
Oh, thank you.
Oh, I'm using that. I'm running for president now.
I own
Come on, we need a
everything.
nice round. We need a nice round 2 dozen, don't you think?
What's 23 when you could have 24?
What's
Come on.
24?
That's not going to bother anybody.
And I can't run as an independent because nobody can ever win there.
Well, yeah.
I'm definitely over 35. I'm okay. I think I'm legal.
All right. And you own all those companies.
855-935-TALK. 855-935-TALK is our number. 855-935-8255. And a lot of presidents are from Virginia.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Once again, the phone number to get answers to those nagging money questions is 855-935-TALK. Get a copy of Financial Physics if you call during the live show on Saturday. But you can get answers to your questions anytime at 855-935-8255 because we do podcasts every day. So give us a call, 855-935-TALK. And Craig, you're next. Welcome to the show.
Hey, Craig, how can we help you today?
Hi, Don and Tom.
Hey.
I'm going to do your Vanguard 2-fund program for my IRAs. And I took your risk quiz. I came up 64. I'm 70 years old, and I was wondering, does that mean I should do the 60-40 split, or does that have? How do you use that risk tool?
That's about right. That 64 would put you at about a 60-40 split, right in that area.
That said, I mean, what sort of rate of how much you're going to take out of the IRA of the money that's on a percentage basis that's in there?
Well, I don't know about percentage. I have over $1 million, and with the formula 69.5 or 70.5,
yeah,
I came up with about $64,000 is what I'll get.
No, you're gonna
in November.
No, you only have to take about 3.5% out. The first.
Well,
year,
maybe it's more than
6.
$1 million then.
No, I'm saying on the $1 million, you would only have to take out.
Well, he's saying maybe he has more than $1 million.
Oh,
he said
okay.
he may have more than $1 million.
That's something to know, by
Because
the way.
that's what Schwab told me.
Yeah, that's kind of important.
Yeah, okay. Setting that aside just for a moment, the required minimum distribution that you have to take out at 70.5. Here's the way I would look at it. Yes, the risk quiz is one aspect because a lot of people think I just checked the box.
Mm-hmm.
The other aspect is, again, knowing what rate of return you're trying to make or feel like. So let's say I want to make 5 or 6%. Okay, now you probably could be in a 50-50 or 60-40. And are you still willing, because in a 60-40, are you still willing to see 25% of your money go away in the next downturn?
Well, but that's basically what the risk quiz is telling him.
Trying to tell him. Yeah.
We're trying to tell him, but I think what Tom's getting at, Craig, is you need to find two things: how much risk you can tolerate and how much risk you need to take.
Yeah, that's the other
and that's a question. That's a question of what you need to make. If, for example, you're looking at your money and you go, I only need to make 2 or 3%. I really don't need to take more risk than that. Then you could do a 30-70 portfolio, 30% stocks, 70% bonds, be far more conservative, have far fewer acid attacks when the market does stupid things, your stomach acid churns. You want to find the balance between needs and tolerance.
I still like the quote from Warren Buffett last year when he said, "Why try to make money?" I gotta get this right. Why to try to make money you don't need and to lose money you may need? I think that's a great quote. In other words, why take more risk than you have to?
Well, what I'm trying to do is
take
not
the
run
right
out of
amount
money,
of risk.
But by the end of my life, I'm trying to make sure I don't. I want to keep ahead of inflation and things like that.
You don't want to run out by
Sure.
the end of your life. By the way, if you just take out the required minimum distributions, you will not run out of money.
You won't. That's right.
Mm-hmm.
If you just take those RMDs, you will not run out of money.
So to replace that, you need 3.5% the first year. It goes up on a percentage base for a while, and then it goes down again. So if you set it up to make 4 or 5% a year, as Don said, very moderate portfolio, you'd
Probably that's about a 50-50.
Right. Yeah, there you go.
That's about a 50-50 mix, probably. Craig, thanks for the call. We really appreciate it.
Yeah, I'm.
Thank you.
855-935-TALK.
I'm a little more
Go ahead,
careful
I'm
with
sorry.
the risk quiz than you are around telling people one just equals the other, because the aspect of what rate of return do you really need? I think that you mentioned that in the last part there, that should be a part of the equation.
I will add that to the Real Retirement Roadmap website, because that actually is something that should be there. I'm going to add that in.
Yeah, I mean, we run into people that have very low scores and think, well, does that mean I should only be 30% in stocks? Well, not if you need to really see a 4, 5, 6, 7% a year increase, then maybe not. You probably have to have more in stocks. You might have to be a little uncomfortable from time to time. That's the reality.
The trick is making yourself suffer without doing something.
And we know the track record is you will do something when times get bad. That has been the track record. Pardon me.
That's why it's so important to build the right portfolio for the risk tolerance, which is why I put so much emphasis on the risk quiz, because you don't want to invest outside of that comfort level, or you are very likely to do something incredibly stupid.
And the risk quiz, by the way, is at both Vestry and TalkingRealMoney.com. It's free. There's no obligation. We will not call you.
No, we really don't do that. And that's something I think we've been trying to get across for the last decade, is that we are not this sales oriented, annoying, call you all the time firm. We set up our company differently. We decided we wanted to help everybody. We wanted to provide an education, which is why we do this show, which is why we do Talking Real Money, the website, and Real Investing Journal, the website, and now the new website that we're getting ready called Real Retirement Roadmap, which is going to be amazingly helpful. It's a step-by-step guide to getting yourself set up for retirement. And we're also doing a class by that name coming up in June.
And near Abbey, Don, do they have a Creeper Road? Did I read that right? Creepy Road, Creeper Road? Something?
Why is that so?
I find that a strange name.
It's called the Virginia. It's a very famous bike trail. People come from all over the country to ride this bike trail.
I thought it had a lot of really weird people on it or something. Creeper, creepy. No? No,
the name came from a railroad, a lumber railroad that ran this route, and it's such a winding, steep route that it had to creep up the mountains.
Ah, okay.
That's the name.
I thought there's just strange people in the woods waiting for you.
No, you wanted to think that.
Do you want to go to one more call for the top of the hour?
Yeah, we have time. We have
right.
like 3 minutes.
Let's take Steve on. Steve, how are you?
I'm good. How are you doing
We're
today?
doing great. How can we help you?
I just had a question. I have a portfolio, and it's basically ETFs and index funds, and it's managed by one of the big 3 companies. And it's essentially, I'm just trying to find out what a fair fee would be to manage such a thing. I'm paying about like 0.89% for the the service they provide. Which
How big is the account?
It's just a hair over $1 million.
I think you're being treated very fairly if you're paying 0.8%.
That's a very fair fee.
Is there any planning? Is there any sort of personal work, or is this simply asset management?
It's kind of a little bit of everything. Yeah, it's more than a robo.
It's not a robo.
Right.
No, it's not.
Yeah.
No.
90 basis points is. We generally state that anything under 1% or below is with a good firm that invests as you need to be invested.
And you're getting personal service and you're getting planning work. I think if it's just for the assets, you could get it for far less. In other words, you could go to a robo and say, I want a 70-30, bang, the money goes in. When you need somebody to talk to, when you got planning, tax, all that stuff, I think paying under 1 is a pretty fair price.
Yeah.
I see. Okay.
Hand-holding is a big part of this business, too.
Thanks,
so,
Steve.
That's
Good
a fair
question.
price. Thank you for the call. 855-935-TALK is our phone number, 855-935-TALK. And we'll be hanging out for like another hour trying to help you get through this life and deal with these money issues, particularly the investment ones. Give me a call, 855-935-TALK. I am broadcasting live from Virginia. Tom's in Seattle, and we'll be back with more.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, by the way, Tom, we have 2 seats left, just 2 seats left for Tom's Wednesday class on the 22nd, the lunch ed class on the science of retirement investing. You can go get those at TalkingRealMoney.com, but we've got a brand new, more involved class. We've never done this class before. It's called Real Retirement Roadmap, and it will be happening on June 22nd in Bellevue. Big class. Sign up for that right now at realretirementroadmap.com. Realretirementroadmap. It's really easy.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.